Please subscribe my channel for having a proper knowledge in accounts, to fill up the gaps of your misconceptions and to fill up the lacunas of your knowledge, so that you can work out your sums alone without taking help of any private teaching or private tutors. Now today my topic is basics of accounts, second part. On the first day, in the first part, I have already discussed about what is event, what is transaction, and how the transactions are recorded, and what is journal, what are the subdivisions under special journal, and what are the subdivisions under general journal. Today, I'll discuss about the classification of accounts, which we consider as the basic of the basics of accounts. The students, they start doing accountancy without knowing the classification of accounts. Accounts. How it is classified. Personal accounts, and impersonal accounts. Under personal account, there are some other two, debtors account and creditors account. Under impersonal account, there are real accounts and nominal accounts. This is the broad classification of accounts. But if one is asked the classification of accounts, one should say that personal account, real account, and nominal account. This is the classification of accounts in short. Then I am writing again the classification of accounts in short. Accounts are of three types or three kinds. Number one, personal account. Number two, real account. Number three, nominal account. From my long experience of teaching accountancy, I have observed the students, they start doing complicated sums without understanding the definitions or meaning of personal account, real account, and nominal account. They are very much confused. Then first of all, you must know what is personal account. Personal account means the accounts relating to a person, but it is not so easy. Personal accounts may be of three types. Number one, natural personal accounts. For example, Mr. X account, Mr. Y account, etc. Number two, artificial personal account. Artificial personal account means the State Bank of India, the corporation, the company, in the eye of law, we consider the companies are having separate legal entity, but in accountancy, we consider a separate entity of business from the businessman as well as from other institutions. The persons, those who can take breath, those who are having flesh and blood, those who are having natural existence, those are natural persons. And the institutions or organizations like State Bank of India, Life Insurance Corporation, Post Office, etc., railway company, all these are artificial persons. And number 3, it is very important that I will clear separately. Number 3, representative personal accounts. What is the meaning of representative personal account? The account which represents a person, those are called representative personal account. As per the golden rule, you know, debit is the receiver, credit is the giver of money. I am giving you an idea that Mr. X introduced rupees 10,000 capital into his business. Here, who is the giver of money? Mr. X is the giver of money. Then, as per the golden rule, you should write Mr. X account credit. And what has come into the business? The cash has come. Then cash account debit. I'll discuss the golden rule or the obsolete this rule. I'll discuss later. But right now, as an example, the students, they can understand in this way that when cash has come, cash is an example of real account, and debit what comes in, credit what goes out. According to that rule, cash account debit, and Mr. X is the giver of money, therefore Mr. X account credit. But in accountancy, as a separate entity concept, using the separate entity concept of business, we never write the name of the businessman. In that place, we write down capital account credit. Therefore, capital account represents Mr. X. Therefore, capital account is an example of representative personal account. Then capital account is an example of representative personal account. Similarly, suppose Mr. X withdrawn rupees 10,000 from his business. Then Mr. X withdrawn rupees 10,000 from business, then cash has gone out. Then cash account is credited as per the rule of real account. And debit is a receiver. Therefore, Mr. X account debit. But again, using the separate entity concept, we do not write the name of Mr. X. There we write drawings account debit. Then drawings account also representing Mr. X. Therefore, drawings account is an example of representative personal account. Again, I am giving you another example. Here, suppose Mr. Worker has cleaned the classroom and rupees 200 is payable to him. Is payable to him, not yet paid. Then who has given me the service? We talk about goods or service. Who has given me service? Mr. Worker has given me service. Credit is the giver. Then Mr. Worker account should be credited. And what he has done? He has cleaned the room. For this, he should wages account debit to Mr. Worker account. Then, in the place of Mr. Worker, again we are writing outstanding wages account. Then entry we are passing wages account debit to outstanding wages account, and this outstanding wages representing Mr. Worker. Therefore, outstanding wages is also a representative personal account. Similar example I can give you, that the salary for the month of February is paid in advance. Salary paid in advance to Mr. S. If salary is paid in advance to Mr. X, then X is the receiver of the benefit. Then S account debit. And cash has gone out. Therefore, cash account credit. Then again, in the place of Mr. S, we write prepaid salary account. Prepaid salary account debit. Therefore, prepaid salary represents Mr. S, and hence prepaid salary is a representative personal account. Therefore, in short, you can say, what is representative personal account? The accounts which represent the personal account or a person, those are called representative personal account. For example, capital account, drawings account, outstandings, prepaids, accrueds, etc. Now, I think all about the personal account is clear. The real account. What is real account? The students may have many confusions about the real account, but in short, we can say that all assets and liabilities are real accounts, but there are some exceptions. For example, capital is a liability, but capital is not a real account, it is a representative personal account. Drawings account, outstanding expenses account, prepaid expenses account, or pre-receipt, all these are representative personal accounts, and more or less the assets and liabilities are coming under the head real account. And assets, you know, tangible asset, intangible assets. The tangible assets which we can see, we can touch, those are visible or touchable, and intangible assets which we cannot see, we cannot touch, like goodwill, patent, copyright, etc. But those are coming under the head real account. Now, number 3, nominal account. Nominal account. In short, all incomes and expenses. All incomes and expenses are nominal account. Nominal account. Now I am coming to the point that how the journal entries are passed. With the help of golden rule or it is called traditional rules or it is called British rule or it is called obsolete rule. Why it is obsolete? Because it is not scientific. But for understanding purpose, as I am discussing about the basics of accounts, I am writing those rules as per the rule. For personal account, debit is the receiver, credit is the giver, debit what comes in, credit what goes out, debit all losses and expenses, credit all incomes and gains. This is for the personal account, this is for real account, and this is for nominal account. Again I am telling you, for personal account, debit is the receiver, credit is the giver. For the real accounts, debit what comes in, credit what goes out. For nominal account, debit all losses and expenses, credit all incomes and gains. And again I am telling you, for understanding this set of rules, the student should know very clearly what is personal account, what is real account, and what is nominal account, already which I have discussed in detail. But with the help of this, the student cannot pass journal entries with their proper understanding and logically. Therefore, some obstacles are there. These rules are called obsolete and old. And this rule students should not follow for passing journal entries. The students then what rule will follow? The rule with the help of accounting equation. That rule students should follow for passing journal entries. That I am going to. Then, based on accounting equation, and on the basis of nature of accounts, the rule for passing journal entries are: debit balance to increase debit balance to decrease credit, just opposite, and credit balance to increase credit, and credit balance to decrease debit. Very simple. Again I am telling you, debit balance, if you want to increase, then it should be debited, and if you want to decrease, it should be credited. Credit balance, if you want to increase, then it should be credited again, and if you want to decrease, it will be debited again. Then what is nature of balance? What is nature of balance? That is very important. If the students can understand that what is nature of balance, then they can pass journal entries with the help of this scientific rule very clearly. This is also called American rule or modern rule. Nature of balance means when journal entries we pass, after journal we put those entries into the ledger, and from the ledger accounts, the brought down balance what we get on what side, that account will have that nature of balance. Again I am telling you, from journal we post them into the ledger account, and from ledger account, after balancing those accounts, the brought down balance on what side we will get, that account will have that nature of balance. For example, purchase account we will get in general on the debit side. Cash account we will get on the debit side. Sales account we will get on the credit side. More clearly, assets, losses and expenses we will get on the debit side. Incomes, liabilities and gains we will get on the credit side. After ledger account, when we post those ledger balances into the trial balance, then trial balance generally agrees. Therefore, from a trial balance, we can have a clear understanding of nature of balance of accounts like this. Trial balance, if you write all assets, all losses and all expenses on the debit side will come, and all liabilities, all incomes and all gains will come on the credit side. Therefore, what is nature of balance? I am telling you very clearly, nature of balance is a very important concept in accounts, and the students, everyone should know nature of balance, that assets, losses and expenses will have debit nature of balance, liabilities, incomes and gains will have credit nature of balance. Now you follow how quickly and how fast we can pass the journal entries with the help of nature of balance of accounts and with the help of accounting equation, that rule. Like goods purchased in cash, rupees 10,000. Here,
yes, goods.
Here, goods purchased for rupees 10,000 in cash, purchase account and cash account are involved. Purchase and expense, its nature of balance, debit. Debit balance increasing, that's why purchase account, debit. Cash, nature of balance is debit, is decreasing, that's why cash account, credit. Very simple. Personal account, real account, nominal account, that concept is not necessary here. Again, if you purchase goods in cash, that means purchase and expense. When you purchase goods or service, we write purchase account debit, not goods account or service account. When we purchase assets, then asset account we write debit. In case of goods, we write purchase account debit. That means purchase means only goods purchased, which have been purchased for the purpose of sale. When any item which is purchased for the purpose not for sale, then that is not considered as purchase. Very clearly, the meaning of purchase means which have been purchased for the purpose of sale. therefore purchase to cash account. Again, if the goods are sold on credit, if the goods are sold on credit, then debtors increasing, debtors balance increasing, therefore debtors natural balance debit, therefore debtors account debit. And if the goods are sold, sales natural balance is credit, sales is increasing, therefore sales account credit. Cash introduced into the business, then cash comes in, cash increasing in the business, natural balance of cash is debit, therefore cash account debit. If cash is introduced as capital, capital is also increasing, natural balance of capital is credit, credit balance to increase credit, therefore to capital account. Similarly, outstanding wage. If wages has not been paid, the wages having natural balance debit, therefore wages account debit. Outstanding wage is a liability. It has credit natural balance, and outstanding wage means liability is increasing. Therefore, outstanding wages account credit. Here no concept of representative personal account. That is not necessary at all. Here the important thing is a natural balance. If natural balance debit, wages natural balance debit, therefore increasing, wages account debit. Outstanding wages natural balance credit, it is also increasing, that's why credit. Similarly, prepaid salary to salary. Then with the help of accounting equation and with this rule, the students can easily pass the journal entries. In nutshell, we can say that the golden rule we should not use for passing journal entries, but the rule with the help of accounting equation and natural balance of accounts, we should pass the journal entries, and by using this rule we can pass entries like adjustment entries and rectification entries easily. Thank you.